Hey guys, it's Cam for Investors Underground. Really interesting video planned for all of you today, and a bit of a different flavor of subject matter that you might be used to hearing from me. I'm going to be talking about a theory that actually has its basis in quantum physics. That's one thing I thought I'd never be saying on a YouTube video about trading stocks, but bear with me for a bit, we'll get into why it's relevant. So today we're going to be talking about the observer effect. Basically, that's a theory in physics that the simple act of watching or observing something can change the way that that thing fundamentally acts. These theories are also known in psychology and sociology, sometimes under the label of the Hawthorne effect. So what exactly does that mean in the real world? Well, for the people who attended, they can cast their minds back to the first hole at the Traders for a Cause golf tournament, where there were a bunch of expecting eyes gazed upon you, awaiting your swing and judging your performance. The people who are watching change the way that you swing that golf club. Personally, I think I almost hit Floyd Mayweather's house with a wayward slice because of it. But it's not only at a golf charity event in Vegas where peering eyes changes the way that you act. When I'm practicing down at the driving range by myself, I can hit 100 balls in a row, but if I want to analyze my swing and set up a camera to record, that will also change the way that I hit the ball. So it's not only the expectation of others that may influence the way that you behave, it's also the internal thought that you might have knowing you're going to be reviewing yourself after the fact that may change the way that you act during the process. So what on earth does all this have to do with trading, you might ask? Well, I'm going to give you a couple of examples and offer some of my theories on how this can play out for better and for worse in the real world. For the first example, I'm going to have to cast my mind back a couple of years to when Nate and I were creating Tandem Trader. It's basically a piece of work by us which studies Nate's live trading so that members can learn from the way he does things here. So at around 8 a.m. every day while we're making this course, Nate would hit the button to record his main trading monitor. He'd go ahead and do his normal trading day, and at 4:30 p.m. he'd hit stop record and the data would be uploaded to the cloud for me to look at and choose the best and some of the worst trades that would formulate the lessons that would end up in the course. And at this time, I was already quite familiar with the way that Nate traded and the strategies that were being employed. But I noticed that during the recordings, Nate probably subconsciously or maybe even consciously slightly adjusted his style, knowing that people would be watching this in the future. And there are pros and cons to that. One of the pros is that you might respect your stops a little better because you don't want to be embarrassed by breaking your rules. But trading psychology is a tricky thing. And one of the cons of it might be that you don't want to eat a loss and you want to trade your way out of it so you don't look stupid. And in those scenarios, the losses can compound and be catastrophic. Knowing that you have an audience watching what you're up to may entice you to increase your size a little so you can show bigger wins and get the ego boost that comes along with recognition from your peers. Everyone understands how dangerous that could be. You know, trading at the best of times is a complicated and difficult business to be in. So managing your emotional reaction and ensuring that you're making the right decisions is hard even when you don't have the expectation of a bunch of people watching. Towards the end of the creation of Tandem Trader, we realized that we needed some more examples of gear and perk and ABCD long setups. So I let Nate know that, and he said he'd try and incorporate some more longs in the day-to-day strategy. But at the time, shorting was working better, and I could sense Nate's frustration in that he may have felt like he was trading for me instead of trading for himself. So we finished the product, it turned out great, everyone loved it, and I hadn't thought about the observer effect that much since. Until the last couple of weeks, I felt like there was a real good example of it at play again, and I wanted to share some of my thoughts on it with all you guys. So for this second example, we're going to be deep diving into the move on the ticker BLNK. So BLNK is a company that is in the electric auto station charging industry. The company loses money every year, and for the most part it looks to be pure trash. But they had a kind of juicy press release where they mentioned Whole Foods, and of course Amazon was mentioned in there, and That's a pretty hot company to be doing business with at the moment. So it was trading previously at $1.50. It gapped up to around $2 on the back of that press release in the pre-market. So we're going to be zooming in on this gap up and the day of trading that followed this press release. And there's going to be a lot going on in this video. I'm going to do my best to explain it and talk through my thought process on why all these things are happening and how this chart unfolded during the day. So the fluff piece PR is out, the stock's up 50 cents, and it's kind of put it on everyone's radar. Not sure if there's really a trade in the open here. It pushes a little, sits back, and the volume kind of dies off. And we're about to see a phenomenon that I've addressed previously in the Beginners series and also some of the webinars that Nate and I have done together, where maybe a popular trader on Twitter or some kind of guru who runs a newsletter or chat room gets long a stock, and all of their subscribers climb over each other to try and get in, and it pushes the stock price up. Historically speaking, those kind of unnatural moves where there's a big volume spike, the guru's kind of getting in and everyone's chasing, really don't end well for the subscribers. And after the guru looks to sell, these things often come right back down, and nowadays it almost feels like shorting these is commonly perceived to be an easy way to make money. Hell, I've even shorted using this strategy myself. I can clearly remember a particular day last year where I clipped 3 stocks short using this exact strategy, and they all faded around 20% to the downside within a couple of hours. I remember it really fueled my ego at the time. Not only did I make money on the trades, but I did it by shorting into the flow of a newsletter service that I feel is subpar. And given that we run what I believe to be a great trading service in Investors Underground, I couldn't help but feel a bit of a us versus them mentality in this trade, and I definitely didn't want to be wrong. All of this was obviously going on privately in my head. But increasingly on Twitter, I've been seeing traders take these thoughts into the public sphere, trashing these companies that are being traded, mocking the chasers who are bidding it up unnaturally, and showing everyone the spoils of their victory once they're proven to be right and these things come all the way back down. It's my belief that the unintended consequences of the observer effect really fueled this stock, and when it held up and traded sideways instead of pulling right back, a combination of wanting to win the battle, the feeling of expectation from the audience who was watching, and also the fact that the trade was really crowded because everyone had made their positions known, made this trade an especially difficult one for people to eat the loss on. And it just seems to happen when there's a combination of ego in play and expectations and maybe a couple of little broken rules. The market seems to have a way of finding everyone's maximum pain. And you'll see that this stock goes from $2.50 to over $4 in a matter of minutes. So what can we learn from all of this? Well, first up, if people are trading for others and not themselves, I really think that the expectations that are placed on the trader by others can have unintended consequences in the way that the trader is capable of making the right decisions. I think secondly, if there's some sort of battle or ego attached, it can be really dangerous for a trader's account. And lastly, when a trader might become too attached to some sort of trading identity or style or a specific trade, then it can be very difficult to walk away from it if the price action isn't agreeing with them. All you have to do is look at Bill Ackman's Herbalife loss to really understand what I'm trying to say there. So BLNK ended up spending a bunch of time consolidating towards the highs, and for the shorts who hadn't taken their loss already, it didn't really give people a chance to exit on some kind of meaningful dip. So sensing that the herd may be wrong and stubborn on this, Nate was long biased the next trading day, looking to buy dips and sell into pops as stubborn shorts from the previous trading day look to cycle out of their positions. And you can see with the blue arrows being buys and the red arrows being sells, Nate executed his trading plan on this pretty well, buying dips and selling pops, trading around a core with a 5-figure profit on this particular trading day. So the short thesis still remains on this stock, and I'm personally short biased myself. But even days after the squeeze day that we just talked about, the stock's trading up at around $7 at the time of making this, approximately 5 times the price from when it first started to make its move. So that's about all we have time for today. A little physics/psychology/trading lesson all rolled up into one. If you enjoyed this video, we do more stuff like this on the Investors Underground website. If you haven't already been, go check it out. If you'd like to get in touch, you can reach out via the contact tab on the website, or you can drop me an email. It's cam@investorsunderground.com. I get back to everyone personally. Glad you made it to the end of the video. Looking forward to speaking to you all and seeing some of you in the chat room.